trading signals can be an awesome way to boost your income even with no trading experience. Take it from my results and my experience. One trading signal provider which I am currently following made more than 8,500 pips of profit within just 1 month, and another few hundred or even 1,000 pips every week so far. If we are assuming 1 lot per trade and $10 per pips, you can guess it yourself, you are able to make hundreds and $1,000 every week. But here's the twist. Despite any great signals, some folks still end up losing money, while I make money and we are following the same trading signals. How can this happen? Well, to be honest, and you might not like the answer, but usually this is your own mistake. And that's why I have made a step-by-step video tutorial on how you can copy or implement trading signals the correct way. So check this out. You will also find the link over here. But despite this step-by-step instructions, some people still do mistakes. And that's why in today's video, we are talking about all the mistakes people are doing when they want to copy or implement trading signals to their very own account, which can actually cost the entire. So if you want to avoid these mistakes and finally make money with using trading signals, stay till the end. And don't forget to subscribe to this channel and hit the notification bell so that you always stay informed. But before we start, as always, this is no financial advice. In my videos and on my channel, I only present you what I am doing, what I am testing, and sharing with you my experiences. However, investments are risky, especially trading or leverage trading. And in case of any doubts, contact your financial advisor. So please don't invest any money which you need to make for a living. We have already done a bunch of videos about prop firms and how you can trade with other people's money and how they actually work. And I also gave you a review here on a service provider who will guaranteed pass prop challenges for you. And if they fail, you will not only get back the money from their services, but also price for the challenge. However, they do not cover all trading so far, and they also do not offer account management so far, and that's why they have additional service which are trading signals. And I'm using them since almost 2 months, and the results are truly amazing. If you want to know more about this service, how they can help you to pass a prop firm, feel free to contact me on Telegram or check out their Telegram channel. Link down below in the description. And if you decide to use one of their services, tell them that Melanie referred you, or just mention the discount code FUNDED20 to get 20% off. And not only this, if you ordered to pass a prop firm challenge with Funded for You, you will automatically also get access to a free trading signal group. And if you like the trading signals and want to have even more trading signals, they do have a paid VIP. Also, for one time. But even the signals have been top-notch. I followed them myself. Still, some people lose money. How is that possible? I mean, I follow the exact same trading signals and I make profit. You might not like to hear that, but the mistakes are generally done by you. Now, let's get started and discover the top mistakes people are doing when they want to use trading signals. And definitely, you should avoid them at all costs, because otherwise they can cost you your entire investment. So let's get started. One common mistake which I have seen, people are using the same lot size for every trade. No matter which trade they open, they do 0.1 lot, 1 lot, 0.5, whatever, but always the same. Which actually means that they do not have a proper risk management, and this is not a good thing at all. So what you should do is, instead of always doing the same lot size, which actually means that with every trade you are risking a different amount of money, a different percentage of your account balance, and you should really avoid that. Instead, what you should do is you go, for example, on cashbackforex.com. They do have a free tool to calculate your risk management, and your lot size. Link to this free tool down below in the description. Just enter here the trading pair you want to trade, the opening price, the stop loss price, your account balance, and the risk you are willing to take. If I trade my own account, I usually go with around 1%. However, if I have some funded accounts, I usually go with less and actually a maximum of 0.5 or sometimes even less than that, because why should we risk more? We already have a really nice leverage, so just better be on the safer side. Now we can calculate here the lot size. And here we would go with a lot size of 0.42. And this is just for this specific trade. This is not for every trade, right? And let me show you why. For example, if we change the stop loss to, let's say, 17 and calculate again, instead of 0.42, we would have a lot size of only 0.15 to maintain the same risk, which actually means if you would keep the same lot size, you would have a 3x higher risk than you actually want. Okay, so it always depends how far is the stop loss price from the opening price, and of course the currency you want to trade. For every trade, just calculate your lot size. And also, do not guess your lot size, okay? Just make it properly. Another mistake is also related to the opening price here, as the opening price is not necessarily the price from the signal. The opening price here is the opening price that you would open the trade on, not where the trading signal provider opened it. So, for example, they gave you an entry at 2181, but the price already changed and maybe moved to 2180. So, just enter here the right number, which is the current market price where you would enter, not the trading signal. Another mistake which you should avoid is starting a trade if it's already too close to profit. So for example, we have here one old signal which said buy Bitcoin USD at price 71450 for a price of $71,450 US, and we have a take profit at 10 pips. So in case you see the signal a little later, or just the market moved too fast and maybe the price is already at 71,500, so already halfway through, and you just open the trade now, think twice, because actually this means you would have the chance to win less. So in this case, take profit 1 would already be 50% less or 5 pips less, but your stop loss is even higher because you entered the trade later, right? Decide for yourself if you're still willing to risk this money. It is different if the Bitcoin, for example, in this case, went a little closer to the stop loss. So because this would mean potentially we can make more pips. Our stop loss is closer, so we don't have to risk that much money, which would be a better deal actually. So really, whenever you're starting and heading into a trade, check the current market price and how far it is from the signal and your take profit. Another really common mistake is the lot size. Let's assume we do have done the calculation over here and they say we should go with 0.6 lot, for example. Now you have 3 take profits over here. So some people, they just open a trade here with 0.6 lots, the second trade with 0.6 lot, and the third trade with 0.6 lot. But this actually means that you are not risking 0.6 lot or 0.5% or 1% or whatever you usually calculate. This would mean that you risk 3 times as much, because the calculation you do is for the entire signal. So if that calculator is saying you should go with 0.6 lot, but you have 3 take profits, you should divide these 0.6 lots by 3 to actually have the correct risk management. If you have only 2 take profits, of course, you wouldn't do 0.2 lot. You would divide the initial 0.6 lots by 2, so you end up in 3 lot. And one request, really. If you have no clue about trading and what exactly you are doing, how to analyze charts and news, don't trade. Or let's say, trade the trading signals, but don't trade by yourself. I have seen a bunch of accounts who made good profit with trading signals, but then they thought, oh, the trading signals are working so great, and it just seems to be pretty easy because we have an 80-90% success rate right now. So they opened trades by themselves. And guess what? Maybe 1, 2, 3 times those trades went well, but then it will crash. And usually with the own trades, they don't maintain a good risk management either. So if you have no clue about trading, just don't trade. Or trade on a demo account. Learn first. Or trade on a separate account. But don't trade on the same account yourself, which you are using for trading signals. On the account you are using for trading signals, only do trading signals. And probably best way even only from one provider. If you want to have a second provider, set up a second account. Depending on what we trade, if it's Forex, indices, or crypto, we do have the option to trade with a broker. But with crypto, we also have the option to trade on an exchange itself or even on our hardware wallet. While I usually suggest everyone to have a hardware wallet and to use a hardware wallet, with trading it can look a little different. But if you are trading, and especially if you are trading short term, you might reconsider. We can trade on a hardware wallet. So, for example, with the sponsor of this part of the video, you are able to trade with the Dcent wallet for sure. But usually the cost for a transfer or to swap tokens much higher than on an exchange. And especially if you are doing short-term trading or your signal provider is doing short-term trading, I would not necessarily go with a hardware wallet, but probably with an exchange. You will find some of my preferred brokers down below in the description, and of course some of the prop firms I'm currently using, and both of them, the exchanges as well the prop firms, usually give you a sweet, nice discount if you are signing up. Link down below in the description, and of course you would support my channel as well. So if you decide, however, to trade with a hardware wallet, please consider the higher fees into your profit calculation and choose a signal provider who do not trade only with a few pips, but has higher and this longer term. It can and will make a huge difference. However, latest if you withdraw your funds and you want to realize your profit, you should definitely go with a hardware wallet. We do not want to trust all our funds, all the profits which we secured and for which we worked so hard for. We don't want to lose them, right? And we don't want to trust all our funds just one single company and maybe they switch off, they go bankrupt or whatever. We have all seen this with FTX, which was one of the biggest. So no matter how trustworthy they seem, we should take self-custody really, really seriously. When you're withdrawing funds, use a hardware wallet such as the Dcent wallet. And a hardware wallet makes things so more secure because those cryptos are really yours. You are holding the seed phrase. Only you have access to your crypto, not any random company, not any random person. And hardware wallets, because they are not always connected to the internet directly, they are much more secure than also hot wallets. Hot wallets can be hacked pretty easily and make transactions pretty easily or transfer all your funds. With the Dcent wallet, however, you have a screen where you can check the entire transaction, all the transaction details, check if everything is correct, cross-check if the details on the hardware wallet are the same as displayed on your desktop or smartphone, and only if you're confident that everything is correct, you checked everything, confirm it with your fingerprint over here. The Dcent wallet is a biometric hardware wallet and there you need to confirm a transaction. But yes, you can also add another fingerprint. So even someone finds your hardware wallet, what should he do without having your fingerprint? Some other really good security features on the Dcent wallet are that you not only have your 12, 18 or 24 word seed phrase, but, and I highly recommend everyone using it, add an additional word which is the so-called passphrase. And the benefit here is that the passphrase is not just a word which the seed phrase generator will tell you or which is bound to a dictionary as the normal seed phrase. The passphrase is anything you want to. It can be letters, can be numbers, it can be special characters, and it is case sensitive. And you hardly have any limits here. So really, it will be impossible actually for someone to guess your passphrase. But this also means if you don't know your passphrase anymore, if you forget your passphrase, you won't be able to access your funds as well. So write down your seed phrase and your passphrase in a really secure way. Do not just write it on a plain piece of paper, but get a metaplate or other secure ways to store your seed phrase. And in the best way, even split it on different locations to be really sure. Additionally, with just one hardware wallet and the Dcent wallet, you can have 80 different wallet addresses, which is really nice for everyone who wants to have a separate wallet address for different projects, but it's also a big security measurement. Maybe you're not that confident with crypto yet, or you don't know how to read smart contracts. This is a really good way to prevent any loss of cryptos, as even if you have one wallet address connected with a malicious smart contract accidentally, you will only lose the funds from one address, and all the other addresses are totally safe. And at this point, I also highly recommend you to have different wallet addresses. For example, I have definitely one wallet address which is just for HODL. They will never sign any smart contracts. I have one which is more like for short-term holding or trading, but also will not see any smart contracts, and they're just dedicated wallets which do smart contracts in my case. So I would definitely recommend you to set up different wallet addresses, if not even have more than one hardware wallet. And if you decide that a Dcent wallet is something you want to look into, I have done a bunch of videos about Dcent already. Check them out there. And with a link down below in the description, you will get $30 off. Or if you decide to get 2 wallets for you and your significant others, for your kids, whatever, or even just for your personal use, you even get $99 off. So thank you, Dcent, for sponsoring this part of the video. Let's get back to the mistakes you have to avoid when using trading signals in order to really make good profit. And the next one is also some part of risk management. So whenever we see some trading signal provider, of course, before we even start, we do analyze the past results. We check if their trading signals are coming when we have time and not when we are sleeping, because of different time zones or similar. Of course, we check if their risk management aligns with our risk management and their profits align with our profit expectations. And if it's fine and we started using them and we are seeing good results, we might get tempted to increase our risk because everything works so great, right? And why not get in a little more and make more profit? But guess what? Stick with your initial plan and stick with your risk management, because past results never guarantee future results. So it doesn't matter if this trading signal provider worked so well for 1 month, 6 months, 1 year, maybe even longer, but we never know how the market changes, how the indicator changes, and if they are able to keep up with this performance. So just don't become greedy. And especially if you're using the leverage with prop firms or just on any exchange or broker with a high leverage, don't increase your risk. You might lose your entire funds or your prop account. Stick with your plan, please. Also, I would suggest you to not just fully blindly copy any trading signal provider. Test them and try to understand them. And yes, you can definitely use trading signals even if you have no knowledge, but I still suggest you to put in some extra time and try to understand the market. Learn as you go with the trading signals. Or if you know how to trade, but you just don't have the time or want to analyze all the trades, then just have a quick look and do a quick analysis on the trading signal and if it aligns with your expectations. The next 3 mistakes are something which I have seen multiple times. So please still stick till the end of this video. I know this video is a little longer than I intended to be, but the next 3 are also really crucial. And by the way, if you found some mistakes which you do, I would love to know in the comments if this video was somehow helpful for you, And maybe you even have some friends who are into trading signals as well and who need to see this video. Then please feel free to share it. This, of course, will not only help your friend to avoid these mistakes and to make more money, but it would also support my channel so that I can do more educational content. And in case I missed any mistake, then also drop me a comment. I would love to know so that everyone in my community can avoid these and just make more profits. I mean, really, the trading signals from Funded for You have been so awesome. There have been so nice opportunities to make great money, especially in combination with prop accounts. And I find it so sad that there are still people not using it or use it but make those mistakes and actually end up losing money. So definitely I can't recommend you enough to check out this provider. Of course, no financial advice. Do your own research, but take the time to check them out. Huge potential over here. You have all the links from the provider down below in the description. And don't forget, if you end up using any of their services, tell them that you are from me, Melanie Buchholz, or use the discount code FUNDED20 to get 20% off. Okay, the next 3 points are really important. And the last thing is actually even one which most people are probably not aware of and which many people are doing. And this can be critical. But let's go with 2 other ones first. Let me get back to this old trading signal to help you to understand this a little better. Whenever we are entering a trade here and hitting the take profit 1, we should move the stop loss from the initial stop loss up to break even, which is around the market entry. And this does not only apply for the trading signal provider I'm using, but actually for every provider. And this will help you to be out of risk for this trade. Of course, what you can do is, take profit 1 is reached and you just totally set it and forget it and you don't even look at the charts or at the signal channel anymore. But what happens if you're not moving those 2 trades to break even, which means that we wouldn't make any profit or just a tiny profit, but we also have no risk. What happens if you don't do that? Is that actually maybe the take profit 2 will never be reached, but instead the chart is turning around and then you have your take profit 1 secured. Yeah, that worked fine. You got your 10 pips, but then instead of hitting take profit 2 and even take profit 3, both trades would end up in stop loss. We don't want that, right? So whenever you have take profit 1 reached, those other open trades move the stop loss to break even. And once you even reach take profit 2, move the stop loss from the remaining trade to take profit 1. Okay, so just always go a step further. And you might have some signal providers who don't tell you that, but Funded for You always tells you when you have hit your take profit 1, so you already know, oh, we hit take profit 1, it's time to move my stop loss. And Funded for You not only tell you that you hit your take profit, but they also tell you that you can and actually you should move your stop loss to break even. And please, don't let greed stopping in and change your take profit because you think, definitely it's going skyrocketing now and we can make, instead of just 20 pips or 10 pips here, I'll just move all my take profits just to take profit 3, so I'll have much more profit. Just don't do it. There's a reason why they have 1, 2, or even 3 take profits, okay? And just don't close the trades manually. I have seen people who think, there's some green numbers now. I could make less, maybe even just $10 or $100. I could save this and secure those $100 now because just a few minutes ago it was maybe minus 100. So I'll better just keep a few profits or even break even instead of going back to loss, even though you have a potential take profit which would make you much more profit. So the trading psychology is like really weird at this point and understandable. So whenever we have or see some loss, maybe instead of having this loss, just close the trade whenever we are like break even or have a little profit and we just want to secure every single dollar of profit. But if you're following a trading signal provider, just follow them. Don't change take profits, stop losses manually. Don't close trades manually. Just follow them. And the last one is something which most people are unfortunately not aware of, and those are spreads. If you're using another broker than the signal provider, you might have different spreads, which means you need to calculate it inside your take profit and stop loss. Because what can happen is, for example, the signal provider will tell you, oh, take profit is hit. And you just look at your chart and say, no, it's not hit yet. But maybe just like it would just need maybe 1 to 5 more pips until it really hits the take. But then, while with the signal provider, it already hit the take profit, yours might just turn around, will never hit the take profit one, but run into stop loss instead. And this can happen due to spreads of your broker and the trading signal providers. So just calculate it inside and adjust your take profits and stop losses accordingly. If this found you helpful, please don't forget to like this video and share it with your friends, and see you in one of my other videos.